Hey everybody, welcome back to the show. Today we're going to be talking about scaling your business. Something at Investor Fuel that we talk a lot about with our members is how to kind of move from the box of the business owning you to you owning a business. And there are a few people that have a perspective that they could share with you that you're going to get as much value out of today as my buddy Matt Bell. Professional real estate investors know that it's not really about the real estate. In fact, real estate is just a vehicle to freedom. A group of over 100 of the nation's leading real estate investors from across the country meet several times a year at the Investor Fuel Real Estate Mastermind to share ideas on how to strengthen each other's businesses, but also to come together as friends and build more fulfilling lives for all of those around us. On today's show, we're going to continue our conversation of fueling our businesses and fueling our lives. I'm glad you're here.
Hey, Mike. Thanks, man.
Matt, welcome to the show. How's it going?
Great. How's your day?
Good. So I'm excited to talk to you today because we've been friends for a number of years now, and I've seen you guys pivot in your business a number of times, and at one point did much more unit volume than you do today, and pulled back because it just wasn't as profitable or didn't fit. But
right.
That's a lot of what we're going to talk about today. It's not all about necessarily doing more volume. It's about building a business that's more kind of sound, right?
Absolutely. Yeah, it's iterative, and we definitely have pushed up to the line, failed in a few different directions, and have pivoted and tightened it down. And, that's kind of what it's all about, is just learning as you go and failing forward.
Yeah. We've all seen those memes of like what some people that think success is like this straight line, right? And instead it looks like kind of spaghetti, just like a bunch of up and down, and you're kind of feeling your way forward. So that's what we're going to talk about today, and specifically around your business and lessons learned. And so before we jump into that, if folks don't know you, why don't you share a little bit about your background and how you even got started in real estate investing?
Sure. Yeah. So I got started in the back end of 2012. Moved to Augusta, Georgia on a wing and a prayer. Worked with one of my best friends, Tyson Schutz. He owns a turnkey brokerage there. Was going to learn the game and then go back to Louisville, and then figured out that it's pretty nice to be all in at $35K, renting at $800 a month, right? Like 20-25% yield. We're still out there. Anyway, so I just decided to stay. We had a definite synergy, and probably about 8 months into the game, thankfully I was fluent at that point. In walked a big fund based out of Charleston, and so I initially started working with them as a buyer's agent, and Tyson was functioning as a property manager. And we started consulting for them and opening up new markets. Try to give them some of their time back, add value. And then they ultimately asked us to come to Charleston and take over the renovation division, because they were starting to scale, right? And so they had the capital. Acquisition was easy to figure out. So their acquisition was going like this, and the renovation was doing this, and that delta was getting larger, and they just legitimately were like, here's the keys, fix it, right? So anyway, over a 4-year period, we renovated just over 5,500 homes.
Yeah, wow.
We were in 17 cities in 11 states. And so I've scaled a lot of businesses underneath that umbrella. And then everybody knows Brandon Barnes, who runs Home Buyers Network, which is now rebranded as I&I Home Buyers. We started that business about 3 years ago. And originally, to your point a minute ago, it was originally built to be a feeder for the fund.
Right.
And about a year and a half ago, we kind of had a hard reset. I left the fund. Brandon was like, this isn't working. And so we decided to build a business that had more than one client, right? And kind of prioritize them as a buyer. They still have a place, but they're batting last at this point, right? Because there's a lot of dealing with funds. And anyway, so here we are.
Yeah. So one of the things that you've probably realized when you left the fund and you're out on your own now, and one of the things that we talk a lot about, obviously at Investor Fuel, and as all business owners we talk about or think about, is if you think back about Robert Kiyosaki's kind of cash flow his quadrants. Mm-hmm. There's like the upper left is you have a job, right?
Right.
Work for somebody else. Then
Right.
the next transition is people are self-employed. They have a business,
Solopreneur.
but
Yep.
they're doing, you're a solopreneur or small business. You're doing everything
Yep.
still. And then the next box up is that you own a business and you have employees and resources and stuff, and you're able to leverage that. And so, of course, then the last quadrant is you do nothing and your money's just working for you. So it's like we all want to move through that quadrant, right? And so one of the things that I think often about is that a lot of times in Investor Fuel, our gold group members tend to be in that lower left quadrant. They're solopreneurs or husband and wife teams or small teams, and they're still working harder than they want to in the day to day. The platinum group is more at the next level, which is people that own a business and they have employees. And you can see it when we're there. Like a lot of the gold members are running out, they got to make a call or they got to do something. The platinum members are like, hey, my team's on it, right? More often than not.
Yeah.
Unless your whole team's there, like you guys were last week. But anyway, what I want to talk about today, I think what people get a lot of value out of is how to move from a business owning you, right? Being self-employed, solopreneur, small entrepreneur, to you owning a business. And you guys have a lot of lessons learned by doing that, right? So
Sure.
kind of share your thoughts on, or maybe even kind of share a little bit of your story about kind of moving through those quadrants.
So my original experience was not really with HBN. My original experience was with Conrax, the fund, and so it was always my job to meet the pace of acquisition, right? So if we're buying 30 a month in a city, we need to be renovating 30 a month, or if we're buying 10 or whatever. And it always ebbed and flowed, which was hard to pivot, So it's kind of the concept of capacity was born, and staying in the highest and best use of your time. We helped scale businesses there first and foremost, prior to getting into the HBN world. And what works. We were talking about earlier. What works at 5 homes a month does not work at 15 homes a month, and what works at 15 does not work at 30.
Right.
And it's okay to fail. You're always going to hit capacity. And the challenge for me in the world of renovation, which was my original experience, was say a guy's doing 5 a month and wants to do 7, right? You win, they win if you've aligned yourself correctly. It's not when you pass that capacity mark, it's not just the 2 that you're above capacity that fail, it's all 7, right?
Right.
In that example. And so you have to be very real time aware that, oh my gosh, I've hit that breaking point, and really try to freeze frame, slow it down, mitigate the damage that is occurring, and implement new systems and tighten it down to where you can push back up. I mean, it's iterative. You're going to constantly fail. And I think, you have to be okay with that.
Yeah. Yeah. There's a lot of, I'd say most real estate investors. So first off, most real estate investors fail before they get started, right?
Sure.
The next kind of breaking point is when you hit your own personal capacity, right? So you're, like you said, whether it's 5 deals, it depends on if you're wholesaling or rehabbing or whatever. But once you get to the point to where you don't have capacity to scale, that's where things break down, right? It's like some people are like, I mean, this is like most small businesses, right? Or the owner really is self-employed. They're still doing a lot of the things. So
Yeah.
if you to get to that next level, you've got to have systems, you've got to have people in place. Um,
But before that, Mike, you have to know where to put those systems and people, right?
right.
Like at Fuel, we're talking, I can't remember who was up, but we were talking last week. Somebody was struggling with this exact topic, and everybody immediately went into solution mode, right? Because we're always wanting to help. I suggested that we take a step before that first, before you even know what the solutions are. You got to know where you're spending your time. So I tell people, to your point, that's a finite quantity. You only have so much time. And so to your point, when you are busier than you have the time to do all those things with, then you got to start making choices between, the myriad of things that you're trying to do.
Yeah.
Stay in the highest and best. So my first step and I would do this with the renovation managers, is first step before you start putting in systems, you don't even know where to put them in, right? You don't know where to hire, like track your time. I think when most people do that for like a 2-week period, every hour, what did I just do? And when you go back and look at it, most people are floored by where they're spending their most time.
Yeah.
Really easy to see that, hey, I spent 6 hours on administrative things per day or whatever, whatever the numbers are. Oh my gosh, like what an incredible waste of time, right? What's your time worth? Would you pay so my time's worth, I'm making numbers up, but my time's worth, let's say $200 an hour, right? Would I pay somebody $200 an hour to tie out the books? Would I pay somebody $200 an hour to do lead intake? No, right? And so if you think about it from that perspective, it's a lot easier. Once you know where your time's going, then it's easier to see, hey, that's not the highest and best use of my time. I need to leverage that.
Yeah. And to complicate it further, as you kind of grow in your business or you grow in your life or your business maturity, then it's not just a matter of what's the highest and best use of your time. It's like what brings you the most or least amount of joy too.
Joy.
Right?
Yeah.
I mean, as entrepreneurs, we all want to live this better lifestyle. And sometimes you look back and there's things that I've done that like, wow, on a P&L, that looks good. It looks like it's great, but like, I really hate it. Like, I don't like doing that anymore. And so, at the end of the day, in your business, when you get to a point to where everything you do isn't about money necessarily anymore, it's like, do I like that? Do I even like that? It complicates everything, right? But of course, it's important because none of us need to be doing this if we don't find joy in it.
Sure. Well, so we talked about that last week too, right? And I mean, when I say highest and best, I mean passion, right? Passion.
Right. Yeah.
Because you're never going to achieve at the highest level unless it's both something that you're really good at and something you really enjoy.
Sure.
Because you're going to bump your chin every day on something, and you got to be able to pick yourself up and overcome it. If you're literally doing that kind of like soul-sucking activity that you hate every day, you're going to die on the vine, right? Like,
yeah.
That's not scalable, right?
Yeah. So let's talk a little bit about there's kind of two thoughts on I'm making up a framework here, but kind of two thoughts on growth. You either like try to plan out everything that you'll need, or there's like just go do it and fail and figure out what didn't work and build from there. And I know that you are cut from the cloth on that latter phase, and I believe that too. There's no way to go figure out everything we have to do. I mean, you should plan. I'm not saying you shouldn't try to be wise about it, but you could never academically plan what we do in our business.
That's right.
And account for all the things that'll go wrong without them actually happening to you, right? So share your thoughts on that specifically to how you guys have grown your business so far.
Yeah, I mean, not to be too abstract here, but it's almost like trying to plan at a certain point without the experience there's only so far you can go, right? So it'd be like me trying to explain to somebody or somebody explaining to me what it's like to be a dad, right? There's only so much understanding that I'm going to have on that until I actually experience it, right? Like, so from the same perspective, I can tell somebody what it's like to do 20 houses a month. But until you get there, you really don't know what you're going to need to succeed there. So we look at it very much, we try to be unemotional about it and understand that we're going to fail forward through it. I mean, as it relates to Brandon and our business, our operating business, a lot of it is understanding that we're going to have to make decisions as we go. So yes, we want to be thoughtful whenever we're trying something new because we want to mitigate the amount of pain that we're going to go through. But at a certain point, you just, analysis or paralysis by analysis, right? There's only so much I can prepare for before I need to take that first step because I don't know what the room looks like from that perspective. So that's how we approach it.
And I think for experienced investors, there's like a business maturity thing where you have to get comfortable with the unknown. You have to get comfortable that some shit's going to break and that's okay. And I'll deal with it instead of like, how do I prevent anything from breaking? It's like, it's like everything. You can't learn unless you fail. You got to be able to fail forward. You got to be okay with, I deal with a lot of new like coaching students and stuff like that. And so many people are afraid that like they got to figure it all out before they go. It's like, just go.
And then they never
fail. It's cool. That's just not how the real world works, right?
Right. Yeah, they never take a step. I mean, again, you have to be a successful entrepreneur at your core, you have to take massive action and not fear the consequences. I mean, you have to be thoughtful and you don't want to make the catastrophic mistake, of course, but take massive action, fail massively, right? I always tell Brandon, my job for that company really is to be the bumper on the bowling lane, right? Like, I know you guys are going to be just bouncing off the bumpers all the way down, but I need to know if we're going in the gutter so I can jump in and help, right? Because I really don't function in the business very much. And as you saw, I can't remember if it was you or Stinson in that room, or maybe both, but Brandon had his ask, and I'm like, I've got that. Stinson's like,
Oh yeah, yeah.
it's like, do you guys know each other? You know, but that's because we're so busy and so driven, and we run, in our own directions. A lot of times we just, and it's a communication thing, which is actually another big part of the scaling conversation is
Right.
the bigger and the faster it moves, the more that communication has to be executed. I mean, that's absurd that Brandon had to ask of like whatever it was, a property management, operations manual. And I'm like, I've got one, right? It's
Yeah.
absurd. We work together all the time. And that's a failure on my part.
Yeah.
So,
But, and those things happen, right? I mean, that's just how it works. But talk a little bit about for your business. I mean, you've chosen um, to be less involved in the day-to-day operation of Brandon Barnes. For those of you that don't know, Brandon's a great guy. We'll add a link to some shows he's been on in the past. And he's more the CEO involved in the day-to-day stuff. I mean, by design, you guys have, not that you haven't had problems, and we just talked about that. Of course you're going to have problems, but
yeah.
by design, you guys have built this from the beginning to kind of scale and to have a team that fits, at least for you, that kind of fits the lifestyle that you want to live, gives you the freedom to do other things that you want to do too, right? There's a lot, let's put it in perspective, a lot of other real estate investors, they start in that employee, go to self-employed. They kind of like are trying to go through each step. And in many ways, you just said, I'm going to skip that step, right?
Yeah.
And I'm going to plug a team in place that's going to handle that.
Yeah. Well, I mean, it's good and bad, right? And the jury's still out on whether it's going to work officially at the scale that we want.
Right.
I think it will. We're failing forward as we go, like any business. But yeah, I've always functioned kind of in a consultant role outside for kind of more institutional level companies. And when I left the fund, we had about a 10-month period where I was in the office and I'm high D, high C. So I'm like, that's broken. What's wrong with this? That's massively inefficient, right? And then I'm taking massive action. It was really uncomfortable for Brandon, and frankly for me too. It's really hard to have two visionaries, in the same space.
Yeah.
And so I made the conscious decision to step back and to let him drive, which is hard for me. And it's hard for a lot of people, which is why they don't, right? It's a control thing.
Right.
And so it's not to say that it's been easy, but you're right. I have been very purposeful in choosing to try to build this thing together where I can consult with Brandon in that business, but not actually be the person driving the vehicle.
Yeah. What advice can you give to people? And you guys have effectively a COO now in Joe. What advice can you give to people to, I guess, think about the bigger picture and plug the right people in place? A lot of people kind of grow their way into it, or they do it by default. Like, I'm going to plug somebody in when I need them. But you guys have had probably the vision, unlike most people do, to say, let's assume we're 5 years in the future and we're big and we have a team. Like, let's start to put the people in place in advance. Otherwise, we can't get there, right? Mm-hmm. Any thoughts or kind of words of wisdom you could share on people to kind of build the team out in advance of necessarily needing them, and then filling in as you go?
Yeah, I mean, I think a lot of it has to do with network. A lot of it has to do with funnel, just like you do with any part of the business. You always want to have, because your sphere of influence is really where you can impact the business most. And the fact that I can call anybody in fuel at any given point and know that I can talk to an expert in lead gen and CRMs and mailers and acquisition, disposition. So we leverage that a lot.
Yeah.
And I feel like we're focused on failing forward. You're never, ever, ever gonna, to your point, you don't want to hire when you have the need. You want to be ahead of it. But you're still not ever going to know if it's the right person ultimately until the rubber meets the road.
Sure.
And so not letting that, what is it, hire slowly, fire quickly, right? I mean, I just want to be thoughtful in the approach, but ultimately, I want to align my interests with people like Brandon and Joe, where if they win, I win. Then all I ever have to worry about is helping them, right? And I think Brandon, very much the same way, has taken that approach with Joe, and that's part of our culture.
Yeah. Yeah. And some people learn that over a long period of time, and some people learn it quicker. I would say I learned that over a long period of time. But part of it is, being a part of a mastermind like Investor Fuel, or being around other people. Like, the wisdom curve is much shorter because you're around so many people that have learned those lessons before you, right?
Yeah, I mean, none of us need to reinvent the wheel. I mean,
Right.
somebody has failed in every single direction. If I can find those people and utilize the bumps and bruises that they've experienced ahead of time, yeah, it's gonna lessen. Then I can fail forward in ways that are truly needed in our development versus things that I could have avoided, right? So,
Right.
yeah.
Yeah. Maybe share your thoughts on, like you said, when you guys started, you were feeding the hedge fund, and it was very transactional, right? You're going deal to deal to deal to deal, as many deals as you possibly can. And then you realized, hey, we can make more money by doing other things with them. And I know over the past, 6 months or a year, you guys have realized that, hey, we need to be keeping some of those for ourselves. And truthfully, that's a common thing for all real estate investors, to get to a point where you look back and you're like, I have some rentals, or I have a portfolio, and you're like, man, I wish it was like 10x the size. Like, I
Right.
wish I would have kept more. I mean, I think that all the time. And you guys are kind of moving the path of keeping more assets for yourself, because it's another revenue stream that someday you won't have to be as transactional, right? So maybe share
Sure.
your thoughts on what you've learned so far around that.
Yeah, I mean, I think it's diversification kind of eases the ebb and flow, right? And so we want to wholesaling is quicker, transactional, right? But usually not as big of a financial gain as a good retail flip might be. So we want to have a little bit of everything going on, and to your point, the cash flow, the steady income eliminates or mitigates the ebb and flow even that much more. So it's more of just a diversification where we can press or pull whatever lever at whatever time. So once I have all these channels built out, or bolt-ons, or whatever you want to call it, then I can truly make an asset by asset decision, or a cash flow decision, depending on where we are in the business at any given time. So, like, if we need to capitalize quickly, like, hey, we need to wholesale this, let's turn it. If it's we're okay, we're steady right now, let's try to make a big lick or two, right? I mean, I want to make I want to have the ability to press whatever button that I need to press at any given time, and having that flexibility, which you don't have if you're a one-trick pony.
Yeah, no doubt, no doubt. Cool. So you're obviously doing some lending now as well. Maybe talk a little bit about your lessons learned on your maybe you can explain what you're doing with lending, but just, you have a different view on the importance of lending, or where that's going industry wide. Maybe kind of share your thoughts there.
Yeah, so I think leverage is critical. I mean, your returns increase when you understand how to use leverage. Um, I think that you have to do it responsibly, and I think it's an individually, kind of determined decision from the risk tolerance level, right? Like, I know guys that are cash and cash only. I know guys that are leveraged to the hilt, and I'm probably somewhere in the middle.
Yeah.
Yeah, we not only are doing some lending, but we're engaging in borrowing as well, and so it's just kind of it's a challenge, right? So, like, I'm consulting for a lending home, which we've talked about, and so that's an interesting world. It's a fix and flip product, and it fits in certain states and certain types of deals. I'm trying to build out very much the same thing that we're talking about with the business bolt-on perspective, where I know I have to call right now lending one, right? If I have a rental portfolio that I need to refinance, or whatever that may be, or a local bank or whatever. We're just starting to build our three-ring bank binder, where I know who to call and when. And so it's a process. We're definitely not in a position where we know and have those built out relationships. I mean, if I could get a straight 15 or a straight 30 on a rental, I'd do that every time, right? But unfortunately, you got to find those people and and frankly, not just find them, but you usually have to kind of graduate to that within that relationship. And anyway, so we're just kind of in process of understanding the lending world, and hopefully we get to quadrant 4.
Yeah, exactly.
That's the point.
It's interesting because at the time we're recording this, the stock market took a big hit yesterday, and I start to see all this stuff on social media, like the real estate market's going to collapse or whatever. People start saying stuff. I don't know when the market's going to shift, but I wouldn't be surprised if it did here soon, right? Or maybe it's a little ways down. I mean, truthfully, I thought it would happen a few years ago. If you would have asked me 5 or 6 years ago, it's just, it's pretty resilient, or it's obviously propped up by cheap money and all those things. But it really is important for people to have a lot of those. I mean, if you have not spent the last few years building lending relationships, because like you said, everybody has different products, everybody has different risk tolerance, and all those things are going to get thrown out the window or shift if the market shifts, right?
Yeah.
Because the underlying finance is going to change. And so maybe kind of share your thoughts on just kind of what you would advise people to do to be prepared for a shift in the market in terms of lending and lending relationships.
I mean, you have to spend time and effort and energy there first. I think you have to be thoughtful about your capital position, cash flow position at any given point. So I hear a lot of people right now where they're selling off assets. They want to be kind of cash rich as opposed to asset rich. Just in case, I think that's a little bit of a scarcity mindset. I think that's a little overboard. But yeah, I want to be, instead of being 75% LTV on everything, maybe we're at 50, right? On a per asset basis. If I'm, used to carrying 40 grand in my checking account or whatever that number is, maybe it's 75 right now. So there's some hedges, but that's what we do in all walks of business. I mean, I just want to hedge so I can absorb any kind of shift and not make it catastrophic. Again, it's that bumper lane mentality. I don't want to make the catastrophic mistake. And so I'm trying to protect myself in every direction that I can.
Yeah, for sure.
Silver bullet, right? And it is an individual thing.
Yeah.
But the more relationships you have in that world, I think the better. The more options you have, products, lending products that you have access to, et cetera. I think that only broadens your ability to take a hit from whatever direction that might come from, which is always unknown.
Right. Yeah, I would just advise people, what happens in a downturn is some people run away, and the wise investors, the people that have been through this before, or the ones that are prepared, know that all that's happening is there's a sale that's going on, and it's time to stock up, right? And so the more you can be prepared with financially, with lenders and people that understand that. Some people stop lending. Like, let's say the small individual guy that's using his own money, like he may just stop lending. Right.
Yeah.
Lending home and big lenders like that they're going to change their criteria, but they're not going to stop lending. What they're going to shift to is the people they have the strongest relationships with, and those that have the most proven track record, maybe just because that's less risk for them, right? But as real estate investors listening to this, just know that when the sale comes, it's time to go shopping, and you and you don't want to find out that your credit card limit is maxed out already.
I'm contrarian about it. I'm very much to what you're alluding to is the people that are capitalized when the downturn occurs can take advantage of the downturn. Whatever that downturn looks like, they're in a better position than the people who are not. And I tell Brandon and Joe and everybody on our team this, and anybody who asks, frankly, like, what do you think? Is it going to shift? What's going to happen? I'm like, I hope it does. To be perfectly frank, if we're executing at the top of the market, then when it shifts, we're going gangbusters. Like I look forward to it, frankly. So
yeah, absolutely.
Bit of a contrarian perspective.
No, I agree with you. And that's my, when I look back to the last cycle, it's like, I wasn't, I started in 2008, so I wasn't fully aware. I kind of came in when the shit was hitting the fan, proverbially.
Right.
But I've learned enough over the last 11 plus years to know that when that day comes, that's when the biggest opportunities come. So it doesn't mean you can't operate in any market, but those that are most prepared for when that shift occurs, that's where the real money's made.
100%. I agree completely.
Yeah. So Matt, you've been in Investor Fuel. Between you and Brandon, you guys have been members from day one, actually, almost 2 years now. I appreciate that.
Yeah.
Can you maybe share a testimonial on your thoughts on the Investor Fuel Mastermind?
Yeah, absolutely. I mean, it's bar none one of the best groups that I've ever participated in. I've got some experience in the space on the mastermind side of the world, and it's unparalleled. The passion, the talent, the wisdom. I mean, you talk about learning from others' mistakes. I mean, it's definitely, people are extremely transparent and are willing to help. They have a mentality of abundance. They're not afraid to share trade secrets or whatever else. It's refreshing, and there's always tons of value, man. Every single time I go, and this is what I tell people when they ask me about Investor Fuel, right? And this is totally unprompted for those that are watching. This is not a Mike told me to say this thing. Like, if you can't 10x your investment attending one meeting, then you're not trying, right? Like, it literally, there's that much value there. So, yeah, I mean, I encourage anybody and everybody, if you're that type of personality who is willing to give first, you'll receive 10x. I mean, it's just the way that you've built that framework and that culture. It's been great, man, since day one.
Awesome, thank you. I appreciate you guys, and I agree, right? Like we've very much put forth, right or wrong. I won't say it was all by design. We built this culture around sharing and giving and being vulnerable, and like at the end of the day, this is how I think about it. We're all business owners. It doesn't have to be a chest thumping exercise. We're all going through some crap. There's always bad parts of the business. Like, let's not pretend. It's not like social media. Like, let's just show the good stuff. Like, let's talk about the bad stuff, because those, just like we talked about this whole show, those failures, those mistakes, those errors are the best learning opportunities we have. And if we share them as a group, we can all learn even faster and avoid those mistakes in the future. I mean, who wouldn't rather learn from other people's mistakes than having to necessarily do it on your own? You know, not that those aren't the best lessons to learn on your own, but if you can avoid them completely, like, why not?
No brainer, man. It's been great since day one. Really, you guys have done a fantastic job. It's a great group.
Thanks, Matt. So if for folks that want to learn more about what you're doing, you got all sorts of stuff going on. Where can they go to learn more, to connect with you?
Yeah, so Brandon, obviously, we have the I&I Home Buyers page. We buy and sell a couple hundred deals a year. You know, we love to connect with people. We're always looking to help in any way we can. As I mentioned earlier, I'm working with Lending Home right now. Happy to help anybody out with fix and flip lending. They have some of the best products that we ever found as an operator. I mean, I'm happy to give my cell phone if that's appropriate, or my email if that's appropriate, you know. Cell phone 706-267-3293. I'm always available. If I miss you, I'll ping you back. Always ready and willing to help. And then my email is matt.bell@lendinghome.com if you know, you want to ping me there. Awesome. Appreciate that. Hey, thanks for sharing your lessons learned and your time with us today. Yeah, Mike, thank you for having me, man. I always enjoy connecting. Yeah, we talk often. I always enjoy talking to you, because the wheels are always turning when we get together. So dangerously so, yeah. Exactly. So, hey, everybody, thanks for joining us today on the show. As you know, the Investor Fuel Show is relatively new still, bringing you great guests and great information each and every week. If you haven't yet, we'd love it if you'd subscribe, give us a positive review on Stitcher, iTunes, Google Play, YouTube, anywhere where you might check us out at. Of course, you can find all of our shows by visiting investorfuel.com. Until next time, everybody, see you on the next show. Are you an active real estate investor?
If so, and you want to latch on to the power of surrounding yourself with over 100 of the nation's leading real estate investors, all committed to building stronger businesses and living richer, fuller lives, you should jump on a call with us to learn more about Investor Fuel. Simply visit investorfuel.com to get started.